G'day, Mo. Thanks for joining me. Look, I thought I'd just pull you in and we'll have a little bit of a chat about markets this year. Obviously, a lot happening. We've seen the fall through the first half of this year. We've seen a rebound of late, which we're all hopeful will be sustained, but who knows? More importantly, I think there's quite a few things that as investors we can learn by how that's played out. So look, just to touch on that first half, it was pretty ugly, wasn't it, for markets across the board? US market had its worst first 6 months of a year since 1970. I think it was down more than 20%. The New Zealand market wasn't much better. Shares were down, fixed income was also weak. And since the middle of the year, sort of call it late June, early July, we've seen quite a pleasing rebound. It doesn't feel like we're quite out of the woods yet, but it's certainly encouraging. Is that how you're feeling about the market at this juncture?
Yeah, it's certainly been an unusual year so far, and those that have been in the market quite a long time probably haven't seen such a tough year for maybe a decade or so, if we think about the New Zealand market. So it has been a tough start, but like you mentioned, we've seen a reasonable rebound. Off the lows, the New Zealand market's probably bounced sort of 10-11% since the lows that we saw in mid-June, and I think a lot of that is to do with sort of investor sentiment around where inflation is tracking, and actually, our corporates are still in pretty good shape. So while that sort of early on risk around inflation getting out of control and central banks being quite aggressive with their tightening, a lot of that hasn't probably gone away entirely, but there is hope that that maybe we've seen the worst of it. And equity markets are generally forward-looking, so they tend to move ahead of some of that evidence of good news that you might wait for in the coming months.
So there's a lot of lessons in there for investors, isn't there? And I think one of the most pertinent is the fact that none of us can pick where the market's going. None of us can sort of get our timing precise for picking the tops, picking the bottoms. Extremely hard to do. So I think uh, it's been a good lesson for investors that these rebounds that you see, they can happen just as quickly as the declines, can't they? So those people who stayed calm, who stuck to their strategy, they didn't panic through April, May, June, July, they'll have found themselves in a better position, won't they? Because while they've worn some of that fall in markets, they've also been there to take advantage of that rebound that we've seen, that we hope will be sustained. So would you agree? Do you think that's sort of just a big picture lesson that people can take from this?
Yeah, I think so, and I know it's sort of an overused saying, but it ultimately is time in the market, not about timing the market. And it's really hard. It's a bit of a coin flip to be able to figure out where markets are going to go tomorrow or the day after that. But I think longer term we can be confident as long as we have a solid strategy that we're going to see some decent returns. And if you got nervous earlier this year and you happen to pull your money out, you're probably sitting there scratching your head a little bit and a little bit disappointed that you did that. So I guess the key is really to go into your sort of investment horizon with a clear plan and then stick to that. Don't get nervous because you see a couple of choppy months. Stick to your long-term game plan, and you'll get these opportunities where things fall. And ultimately, it's like buying shares on sale, isn't it? So if you've got a 10-year plus time horizon, then these are the times you look for. You want to buy things on sale rather than always buying them at sort of quite expensive levels.
Yeah, that's a really important point that you just touched on at the end, because a lot of the commentary that you hear out there, or that we even talk about, is sort of targeted as at those who are already invested and helping people sort of navigate these sorts of markets, especially during the tough periods. But we should also remember that for new investors, there's a lot of new investors out there, younger investors, people with capital to put to work. For them, periods like the first half of this year, or even at the moment, there's a real silver lining, isn't there? Because as you've just pointed out, none of us want to buy these great businesses at all-time highs. We'd love to buy those great businesses a little bit cheaper,
Mm.
10% off, 20% off, hopefully even cheaper than that. So the silver lining of the rough periods is that for people with that 5-year view, 10-year view, or beyond, and you should always have that if you're in a volatile asset class like shares, this is the times when you do get those greater opportunities. So look, I'm glad you pointed that out. Mo, you talk to a lot of business leaders and CEOs in your job, particularly here in the local market. You're always in touch with the companies and keeping yourself updated with what they're doing and putting a bit of scrutiny on them to make sure that our clients' money is in good hands. So when you're having those conversations with boards, with managers, with CEOs, are you getting the feeling that corporates have they pulled back from investing and growing and expanding because of this year's uncertainty, or are you seeing those good businesses just look through that, carry on, and keep their eye on the long game? What's the vibe out there?
Yeah, I guess they're just like you and I. They're all human, so they get nervous just like you and I do when we see lots of different news flow out there in markets. But I think the important thing that I see from them is there's probably some cautious optimism, and it's the benefit of having been around a long time for a lot of these CEOs is they've seen different cycles. And the thing that we always look for, and you see that in the best companies in our market, is that they don't have knee-jerk reactions to something that's happened, over the last few months. They've got long-term vision for their business, and they kind of stick to that. And so we actually want to see companies when there's a little bit of turmoil, a little bit of uncertainty. We want to see them have confidence in their own business to invest for the future. So companies that are saying, "Hey, look, we're still investing in new facilities, new markets that we're trying to grow into, new products that we're releasing," all of those things, at least to me, is music to my ears, because it says that those companies are looking at the long-term game rather than the short-term uncertainty. And if they are starting to get bogged down with the short-term stuff, then they're probably losing sight of the long-term prize, which is really what we're invested in them for. So companies that continue to spend on capital expenditure, continue to be cautious around their sort of short-term spending, but certainly aren't going into hibernation. Those are the companies that tend to endure, and they're the companies that we like and invest in for the long term.
Yeah, that's music to my ears as well. And those businesses that do that, when the world eventually comes out of its funk, or whether it's a slowdown, recession, weak period, whenever those periods pass, and they always do pass, those companies that invested through that period and stick to their long-term strategy, they always come out bigger and stronger, don't they? I think that's a lesson that we could all learn from. Investors could too. And I'll let you go shortly because I know you're a busy man. But the important message I think that I've taken from this discussion is that investors need to stick to their strategy. They need to make sure that their portfolio matches their objectives. They stay diversified. If they focus on quality, if they maintain that long-term view, then they're well placed to navigate difficult periods like 2022, and to be well set for when you get those inevitable rebounds or more positive periods. And for new investors as well, I think there's some important messages, and some of the things you've mentioned and that we've talked about is that if you're a new investor, if you've got money to spend or invest, you really do need to be a little bit brave and maybe push yourself out of your comfort zone and take advantage of some of these weak periods, because those are the times when we often look back and where we find ourselves wishing that we had done a little bit more. So thanks for your time, Mo. Great chat as always. I think we'll leave it there. Much appreciated, and thanks for listening, everybody.
Thank you.